Welcome everyone to another episode of Investor TV. Today during this live panel, we'll be discussing mining for defence, exploring military metal projects. Joining me today to share their perspectives on this issue is Ali Haji, Chief Executive Officer and Director of American Tungsten Corp. Murray Nye, Chief Executive Officer, North American Niobium and Critical Metals Corp. Craig Bradshaw, Managing Director of EQ Resources Limited, and Christopher Ecclestone, Mining Strategist and Principal at Hallgarten and Company. Welcome to the show, everybody.
Nice to be here.
Thank you, John.
Thanks, John.
Yeah, several of you have been on the show before, so this will be a common occurrence. But just for everyone new who's watching, this is a live panel discussion, and you've also got the opportunity to ask questions live through the panel, and I'll answer them as when I see fit and when they fit. So today's topic is mining for defence, exploring military metals projects and how the race for critical minerals is reshaping national security, industrial capacity and global alliances. As defence technologies become more metal intensive and supply chains grow increasingly fragile, nations are reassessing where their strategic metals come from and how they're developed, and ultimately who controls them. Christopher, given this shift towards security-driven supply chains, where do you see the most investable opportunities emerging in military-relevant metals?
Well, I think before we start, we should actually state, it has been noted by virtually one or two people, that the basic military metals are iron ore and aluminium. And it's quite often forgotten that without these, you don't have a defence industry. And a lot of countries have given up their production of these metals. So they're in fact as rare in some economies as the more exotic critical metals are. But going back to the targeted metals, one of the problems we've got with, let's conjure with some metals like antimony, tungsten, rare earths, tin, etc., is that many projects in the offing and very few actually producing. And in a military situation, a war tomorrow, if you don't have production now, you're not going to be getting it for 6 months, a year, even with a sort of like a massive pulling up of the bootstraps to get a metal going. We cast our mind back to things like the Second World War. Basically environmental regulations and everything else went out the window when you needed a metal and you didn't actually have any production of it at the time. One telling factoid is that the US had no tin production and it still has no tin production. In fact, relied almost entirely upon Bolivia for all of the tin in its massive war effort of World War II. So, even with the best will in the world, you sometimes can't find or make domestic production out of thin air.
So definitely getting a feeling of development or producing assets, maybe getting a bit of a
production. I mean, a pile of paperwork, a BFS that is 2 feet thick is not going to help war production.
Absolutely.
And that's what we're really talking about. We're talking about war production.
Yeah, definitely. Well, looking forward to jumping into this whole topic a lot deeper. And obviously there's a huge macro environment that goes into this all the way down to the project level. But before we do that, I just want to give all of the viewers a bit more of an idea of who each of you are. So I'll give each of the CEOs and Christopher as well the chance for 90 seconds to just introduce who you are and what your project is. So first up, Ali, American Tungsten Corp is a Canadian exploration company focused on advancing the IMA tungsten mine restart project in Idaho. Tell us a bit more about it.
Thanks, John, and thanks to our listeners. American Tungsten holds the Imo mine in Idaho. It was a past producer of tungsten up until 1959. It's had work done on it by Inspiration, which was Anglo-American between 1979 and 1982, Gentor between 2008 2010, about 57,000 feet in total drilled on the project. And that image you see is from our zero level with tailings at the bottom of the valley there. The advantage that American Tungsten has is its high grade of 0.63 tungsten, over 2 ounces per ton silver, as well as 0.15% moly. So the silver and moly credits, that offsets our OPEX and hedges us well against any decrease in price. More importantly, I should say, the low capex that we're anticipating. So a very small but mighty IMA is expected to produce about 8% of US tungsten demand, 10% of US moly demand, and about 350,000 ounces, I beg your pardon, of silver when in production.
Fantastic. Thanks for that, Ali. So heading further north now, Murray. North American Niobium and Critical Minerals Corp is a US-based exploration company focused on REEs, niobium, and nickel copper in Quebec. What's special about your project?
Yeah, hi, John. Nice to be here, and I really appreciate the previous comments from Christopher and Ali. I'm right with you, Christopher. I think it's very, very imperative that we get these things fast tracked. But where we're at is we're an exploration company. About 7% of the niobium in the world is produced out of Quebec. We're in the largest Proterozoic belt in the world in this area of Quebec. We've got about 3 or 4 targets. We've staked about 35,000 hectares in the area. We're going on historic results. Then we've done our own exploration program, basically with channel sampling, soil sampling, and then we've gone to radon surveys and backpack drilling. The holdup for us has been the new process in Quebec as far as what they call the ATI. And it's a permitting process that was brought in 2024. And it's relatively new, and we're feeling our way through that. It's been a little bit onerous, but the response from the various parties involved, from the Indigenous people right through the communities, has been very, very positive. They would like to see some mining in their area. We have very, very good targets on niobium. And outside of Quebec, most of the niobium in the world is produced out of Brazil. So there's a real shortage of this. And this metal is absolutely critical in a lot of defense applications, which I can get into later. Thanks.
Thanks, Murray. Yeah, niobium definitely fits the bill along with tungsten and antimony and a couple of the other ones that were mentioned. And so now hopping to the other side of the world and into that production environment as well. Craig, EQ Resources is a leading tungsten mining company with world-class tungsten assets in Mount Carbide in North Queensland, Australia, and Barruecopardo in Salamanca province in Spain. Yeah, sorry if I massacred that one, but tell us a bit more about the production.
Yeah, thanks for having us on. Yeah, look, EQ Resources has got the 2 assets. Mount Carbide, which you can see behind me there, is our asset in Australia. It has been processing low-grade stockpiles, but we're heading into, as of February, we'll be back into higher-grade ore, uncovering the Alliance vein system, which is about 1.6 million tonnes at 0.264% tungsten. But that asset's producing at the moment. We produced 60 tonnes in the last quarter out of that asset, processing low-grade. From February onwards, we expect to be producing around 1,600 to 2,000 tonnes contained WO3 out of carbide. Equally, our asset over in Spain, Barruecopardo, has been in operation for some time. It has had trouble in the past in terms of recoveries, but we've solved that with a variety of new technologies we've implemented. It had a record production quarter in the December quarter 2025. Of 33,000 MTU or 330 tonne. But we've got that now on track to be producing in the order of 1,400 to 1,600 tonne per annum. And so 2 very good assets, 8 to 9 years based on current reserves. Significantly, Barruecopardo's only had 45% of the resource converted into reserve. In carbide, we've only had 23% of the resource converted into reserve. We will be undertaking more drilling at both assets throughout 2026 to extend the life. But we've got long life assets that are producing into a very good environment.
Fantastic. Thank you very much, Craig. And Christopher, last but not least, Hallgarten and Company is an independent research and advisory firm specialising in natural resources sector. Give us a brief overview of what your company does.
We cover most metals. So right from the precious through to the critical metals. We're particularly known for having covered things like antimony, tungsten and tin during a period where, frankly, the market did not give a damn about these metals, particularly antimony and tungsten, because both of those metals suffered very long periods of severely low prices. And in the case of antimony, there were actually no listed stocks in most markets until really last year. So there was more of a labour of love than anything else in covering antimony during that period. But tungsten was also enormously unprofitable for even the few companies that were producing in the space because of artificial price suppression, really, that was coming out of China. But now, eventually the world turns, and we've got the realization that not only are these critical for metal production for the defense industries, but they're just required for basic industry as well. Tungsten, particularly in drill bits and in machine tooling. So, tungsten's vital for the auto industry, for instance. And so, finally the blinkers have dropped, and the world is waking up to the fact that it had become enormously dependent upon China for things that were, must-haves, metals that were must-haves. And so here we are now. The world has woken up. What we need to do now is to actually get the production going. And despite, all the kerfuffle about antimony, for instance, not an extra teacup of antimony has been produced by any of the listed companies that are out there. So, because the projects are not even, in most cases, near to production. So that is quite damning. And to come back to Murray's point, it's the regulations, the willingness is there in the companies, but the governments, whether provincial or national levels around the world, are still dragging their feet. They're saying this is something we must have, and yet they're still assessing the permitting as if it's some sort of elective mining activity like gold, for instance. If you're going to make things critical, you have to put the money where the mouth is, or not necessarily money, but the permitting to get the things fast-tracked. And fast-tracking is really the word that we need to, make our new mantra. And government needs to make it its new mantra.
Yeah, definitely. That time principle often gets forgotten about in these cycles. And like you say, it is a cyclical industry. So as I said before, that there are rather live questions. So we've just had a bunch of them come in now, and you've mentioned a few that are pretty pertinent. The last one you mentioned there was the governments. Maybe I'll throw this one over to Murray. The asker has said, do you guys expect governments to step in with financing and other incentives, or will the private market still continue to carry most of the load? What do you reckon, Murray?
Yeah, I believe they will. I think it's they need these things advanced very, very quickly, and I don't think they can take the risk on letting the capital markets do all the heavy lifting. I think when these things come to fruition, or it looks like you've got something that's maybe feasible, I think that at that point, I think the governments could step in very, very quickly. I know they're talking about it. I think the U.S. government has done an excellent job of actually funding some of this stuff. I know the guys at U.S. Antimony very well, and they've done very, very well with the U.S. government in advancing their projects. I think we'll have the same thing in Quebec, both with the provincial government and the federal government of Canada. I think we're in a good position there if we can identify resource.
I would just add to that very quickly, if I may, John. With respect to the U.S. government, they certainly are deploying capital with the U.S. rare earths, and based on the current narrative, they are looking to take equity positions in private companies that are looking to bring production online for these critical metals. The various grants that the DOW, the DPA, Title III, DFA, DLC, some various different organizations in the United States today currently deploying capital, but not just in the United States. For instance, Fireweed Metals received funding from the United States government not so long ago, as did Sisson in New Brunswick. So the governments are certainly deploying capital, but the pace at which the governments deploy capital may affect our opportunity or ability to come online at a pace that would suffice or meet the requirements of the government. And thus, we would look at equity markets as well.
I think that's a good point, Ali, is the pace within which things move. So it does, I think there seems to be a willingness from governments to support projects, but the pace that they move at in terms of developing or supporting assets seems to be much slower than the rhetoric suggests in terms of the need or the demand for products. Equally, I think Chris makes some excellent points in terms of the fact that actually getting fast track approvals is critical. You know, when you look at today, a new discovery, normally 10 to 15 years from new discovery to an operating mine. If you're trying to fast track, you know, that might come in 5 years. That puts you in the 5 to 10, but it doesn't turn it into 1 to 2 years. And if governments are serious about solving the supply side issues across the variety of critical minerals, then a lot of work needs to be done on the government side to remove red tape to be able to have projects or mines and operations that have previously been in operation come back into operation much faster.
Yeah, and if I throw that question back to Ali now, because I know you're kind of in there busy drilling an existing historical mine there. What are the hurdles, or how quickly do you see yourself bringing this from the existing infrastructure into a producing mine?
Good question, John. The fact that we're on private and patented land means our permitting requirements are significantly fewer than perhaps somebody on forestry or BLM land. We're also underground above the water table with no discharge, and so we don't require water treatment. The intention for us is to have first product sale before year end and commercial production early 27. As far as permitting is concerned and sort of fast tracking things, I had the honor of speaking with Governor Little in Idaho back in December, and he's the individual that put the SPEED Act into place for companies in Idaho looking to fast track permitting. And then had the opportunity not so long ago to be in DC to meet with Congressman Simpson and Senator Risch. They've also put forward a strategy that allows us to use Fast 41, which is the federal fast tracking program that exists in the United States. So permitting for us wouldn't be as onerous as perhaps somebody that's operating close to BLM land or forestry land or under the water table. So we have that advantage. But the government's certainly putting money where their mouth is, so to speak, with respect to assisting us to ensure that we have the permitting necessary to meet that objective of being the first producer of tungsten in North America since 2015.
Fantastic. So just had another question come through. We'll send this one over to Christopher. Obviously, defence stocks have gone up considerably across the board, and he's asking, do you still see any mispricing in the market?
Yeah, I think that, when you go to the racetrack and there are 10 horses in the race, you throw money at every horse, figuring that one of the horses is actually going to come to the finish line. And in this case, we have, unfortunately, within government, very little skill set in picking winners in the racetrack of the corporate world. Sometimes they will go for the biggest projects and throw money at those. But as we know, in all of these metals that we're talking about here, antimony, tin and tungsten, the universe is not going to be monster mines. It's going to be small mines. Small mines for small metals is my mantra. And so that makes it even harder for the governments to wrap their brains around which horses to back. And we're unfortunately seeing some money being thrown at projects that have like headline, big market caps in the billions, when they're really not the companies that need the funding. And they're also the projects that are going to take much, much longer to get into operation. I mean, if we look at Perpetua, which has the stibnite mine in Idaho, and as Ali has pointed out, Idaho is a very, favorable environment there. But the reality is that mine is a mega mine and will take 4 years, possibly 6, to build. So it's not going to provide any solace to the shortage of antimony at the moment in the marketplace, whereas a much smaller operation could potentially be going in a year or two. So the question is, do you back big over small and nimble? And my view is that some projects are brontosauri and the other ones are the mammals. And as we know from the history books, the mammals eventually won.
Well, I think we should shift over towards Craig there, because Craig, you're currently got the second largest production profile outside of China, if I didn't make a mistake there. So, well, how do you see that playing out? Is quantity actually kind of is it a major factor in your share price accretion?
Yeah, I think it's interesting when you look at how governments back projects. I think the challenge is if you are backing big projects, it's a case of are you putting all your eggs in one basket as opposed to multiple smaller projects? Potentially, you bring more projects on and have more success across it might be a number of different geographies, but you're then likely to have more success given that the spread of opportunities. Both of our assets that have been in operation during World War II, World War One. The carbine asset has been variously operated and closed a number of times over 100 years. Spain asset is very similar, and so in both cases, it wasn't government money or government support from a retooling or a restart that got these projects up and running. It was markets, customers, customer demand that enabled both assets to come up and get operating. Previously, I spent 14 years building and running Masan High-Tech Materials in Vietnam. It was and has been the #1 producer outside of China for a number of years. Over the next few years, it goes through a large cutback from the East Pit to the West Pit. During that period of time, its production will drop down to a much lower number. At the same time, our production is increasing. We did 1,680 tonnes across both assets for the financial year ending June 2025, but moving both assets into a space where they'll produce combined 3,000 to 4,000 tonnes, which will put us in the #1 spot in the rest of the world in terms of production. But fact is, irrespective of that, the global demand that we've got in the rest of the world, there's a lot of opportunity for a number of companies to grow into that so that we wean the demand for the rest of the world off of Chinese supply. Around 85% of global demand is actually met by Chinese supply. If we want to have independence from that, which is the stated objective across a number of governments, then there's room for a number of projects. We don't look at our competition being American Tungsten or an Almonte or a Fireweed or a Guardian. Ultimately, our competition is China. China's predominantly 4 or 5 state-owned enterprises. So effectively, the competition is the Chinese government and the policies that the Chinese government's looking to employ. To overcome that and overcome aspects of that, that's where government support is needed to make sure that it's a level playing field and that companies like us and others don't get consumed or wiped out on the whim of Xi Jinping.
Absolutely, and you mentioned an important word there that we should dig into a bit further now is that China control of these strategic metals. So, what do you think it would take to break that dependency? Maybe we can shift this one over to Murray. What do you think is required from the Western world to be able to break that dependency and have a bit more of a fair market?
Well, I think we're on the right track, but it's just got to move faster. We've got various assets out there. Like when you're talking about tungsten, I met with the former head of, or the former CEO of North American Tungsten, and they had the Fireweed mine and the Mactung mine, and the Fireweed mine actually holds about 10% of the world's tungsten. When it comes to niobium, we're not so dependent on China, although I think the Chinese have a lock on that mine in Brazil, and they do all the processing, but they're the #1 producer with, like I said, with Quebec producing 7. So we're in the right province, the right area to maybe improve on that. But but we really need to, move these things along and identify. And I really like the fact that we've been talking about smaller opportunities. I think that's really, really important. I think these things, I'm very familiar with the antimony situation as it started out, and now that the tungsten, we looked at it. I helped start up American Tungsten when I was asked to try and find an asset for that company. We have the same thing with niobium here in North America or in the world primarily, and niobium, by the way, is just becoming more and more strategic as they develop more assets or more uses for it. Like it's very, very critical to the defense industry with the different types of alloys that it produces, and stuff like fast charging. There's a company out there that's I think it's called NIOB. It's using it for fast charging EVs. So I think there's some really, really interesting aspects to that metal. Not widely known. Not many people have ever heard of it. And then, of course, we have the rare earth elements for the magnets, which are a huge part. In getting back to the supply chain, I don't remember if you guys remember a few years ago when Ford, I think it was Ford that had their F-150s completely stopped because of a computer chip. So it just gives you an idea of what can happen very, very quickly in the supply chain. So these things are a must. It's not a question, should we do it? We must do it. So I think that's where this attitude has to go. I think we're on the right track, but it's got to move faster. And I really like the fact that we're talking about smaller assets. I think those things can move quicker. I've been involved in a couple of smaller operations, gold mines that went into production, and those things can move a lot faster. Thanks, John.
Yeah, I've got a follow-up question there for Ali, considering it's been a smaller cap company that's really shown some upside over the last year. Like, what do you think investors should be looking at to distinguish genuinely strategic projects from those that are simply kind of riding the critical minerals wave, so to speak?
I think the answer I'm going to give you is going to address your question, but I also want to touch on what Craig said with respect to us being the opponents versus China, right? We've got to come together to make sure that we're all doing what we need to do to bring these minerals online and ensure that Xi Jinping and the Chinese don't have the opportunity to shut us down. What we really need to pay attention to, I think, is the processing capacity that exists within the nations that are outside of China. China played the long game with respect to ensuring that they have not only the resources, but also the reagents and the processing capacity to produce the goods and services that we now demand for the rest of the world. So bringing mines online quickly, nimbly, and dynamically will certainly provide us with product. But having a processing plant, in the case of tungsten and APT, and thankfully we do have GTP in North America, is a huge gap relative to being able to compete with China. So we need to bring that processing online quickly as well. Now, to answer your question with respect to the nimble nature of TUNG, I suspect that having a lower capex, in my view, when you look at Perpetua, for instance, $2 billion from Exxon, that's, in my view, 2 billion ways to fail. When you have a project that has a 30 to 40 million capex, that's a quicker, more nimble, more dynamic project that can be brought on quickly. And if you have the grade to support a production profile that is impactful, your shareholders start to see value in that. And I think that's why we've had the accretive valuation upticks that we have in our currency today.
Okay, you mentioned that downstream kind of processing, and there's a question here that's aimed towards yourself, Craig. EQR previously pursued vertical integration as a way to de-risk supply and capture more value downstream, including the potential acquisition of processing assets like the ferro-tungsten refinery. How are you thinking about vertical integration today? Is owning the downstream processing still a strategic priority, or has your view evolved given the capital intensity and execution risk?
Yeah, look, good question. The way to think about processing, in my view, is it's not a big margin business. So having built the Masan High Tech APT refinery in Vietnam, which is a hybrid between Chinese technology and German technology when we built it in 2014. But the margins in that business historically have been around 7 to 12%, right? So in terms of capital spend, not big margin businesses relative to, say, tooling companies or mines, even particularly where prices are at the moment. The thing that and there's enough processing capacity in the rest of the world to be able to process more tungsten concentrates that are currently available between Sandvik's plant in Austria, the plant in Buffalo, Towanda GTP, Kennametal in Huntsville, and Masan High Tech in Vietnam. Right, the plant in Vietnam's never actually run at full capacity. I think the most it's ever run at is around 7,300 tons out of a capacity of about 9,300 tons, and so of APT. And so there's capacity there. The smelters, though, are an enabler. One of the things that's happened over time is that the smelters tried to address their inefficiency by pushing that inefficiency up into the miners and forcing the miners to produce cleaner and cleaner concentrates targeting, say, a 65% WO3. The problem with that is your recovery goes down. And so the refineries can be built to handle lower grade concentrates. They can handle down to 30% WO3. There's some actually APT refineries in China that can handle down to low 20s. And they deal with the impurity issues in the smelter. And so the way I look at and think about APT refineries is they're an enabler. They're an enabler to deal with the impurity issues without losing recovery of your tungsten from the mine. And it's a much more efficient and cost-effective location to deal with those impurities. So from an APT perspective, I look at a refinery as an enabler of lower grade and more volume to be able to bring brought on without dealing with that at the mine level. Smelters like the ferrotungsten smelter, yes, that's still in our horizon in terms of investment opportunities that we're discussing and looking at. The thing for us at EQ was to get through the challenges we had in 2025, facing liquidity, solvency, some governance challenges. We have successfully navigated and resolved those. We recapitalised the balance sheet in December 2025. We renegotiated the near-term debt into 3-year term debt in late 2025. We're going through a refresh in terms of a new independent non-executive chairman. We expect to be appointed within this quarter. And so those things have dealt with the risks that the business have had, so that now we can actually focus on and fixing the operational challenges we had. So we're getting up the curve. December quarter was cash positive for us at an operating level between our two assets. We'll continue to build on that as production picks up and prices continue to move north. And that then enables, on a strong foundation, to move ahead with investments in that downstream where they make sense, either in potentially refineries or in ferrotungsten. Then enables us to have a differentiated product and a larger addressable customer base.
Okay, fantastic answer. Yeah, there's definitely risk involved with going downstream, as other companies have felt before, especially in the rare earth space and other sections, but can be a huge upside as well. Now, you mentioned the upwards trajectory that metals like tungsten have been on recently. I mean, most of the military-based metals have been on them, but if I throw this one over to you, Christopher, this is another question from the viewers. If defence spending plateaus or political priorities start to shift, what protects these projects from becoming stranded or uneconomic again?
Oh, great question. Defence spending is not about to plateau. It's on a trajectory upwards, and we're not even near where it's going to go. And there's going to be a reprioritization in defence spending towards the materials that go in. There's been a lot of focus on chips and the technology and paying lots of money for this very sophisticated widgets. Now I think we've got a focus has swung around to what are all these widgets made of? And the component, most of the value added has been going to the tech items that go into, very sophisticated $500 million ships and planes, but those planes are made out of something, and the metals that were going into them were just giveaway prices for way too long. But we do have a situation which I perceive, which is in these metals where you have small mines, you're less likely to be getting swamping of the market. And this is very much a different situation in rare earths, where by 2030, I believe we will be drowning in rare earths. And yesterday's shocker was that the US said that it wasn't going to be providing a floor pricing for critical metals. I think that that's not a case of that any of us here should be losing sleep over, but everyone in the rare earth space should be worried about, because ultimately there's not only the factor that there will be too much supply by 2030, but you still have China wielding the big stick in that metal group, and can potentially come in and pull the rug at any point. And they've done it 3 times in the last 12 years, the past 15 years. And the Chinese are still the tail that wags the dog in rare earths. So the West is crawling out on a limb with massive spend on rare earths that is not really being predicated by any sort of demand equation on the other side, because the military are not big takers of rare earths in the scale of things. A lot of that is being predicated by EVs. And, EVs are having a bit of a pause, to put it politely, at the moment. Tesla sales were down in the most recent announcement. So the metals that we're in here have all got a good base of demand, do not have prices that are excessive. That does not mean the prices won't pull back. Antimony at the moment is in free fall. It got to $60,000 a tonne, and now reports are saying it might be $45,000 a tonne. And I wouldn't be surprised if it goes to $25,000 a tonne. And at $25,000 a tonne, after having $3,000 a tonne for decades, is a great price. Everyone should be making money at that level. So you do not need super prices. And it is almost a case that when metals go up too steeply, that they almost inevitably turn around and go down very steeply. So I like to see gradual increments in prices so that we don't end up, having a Wile E. Coyote moment in the prices of the metals that we're moving and shaking in.
Yeah, the best cure for high prices is high prices, as they say. So. Yeah, that definitely makes a lot of sense. If I throw the question over to you, Murray, and you've got rare earths in your project there, do you want to run us through where do you see the price narrative going from here, separate to the niobium?
Well, I think Christopher's made some good points there, but I think. There isn't really a supply in Canada or North America for that matter. So I think the onshoring of it, I think, is very, very important. And we certainly have the ability, I think, in Canada to develop these assets. I think, but there a lot of the stuff associated with the rare earths are, like something like tantalum, and there's a few other scandium. Some of these other products are valuable. I think one of the mines in Quebec has a real good tantalum credit as well. So they're multi-element. The niobium, I think, is a little different. In fact, it's being used more and more for different applications. So they're finding their way through that, and the alloys are very, very important. I think so. It's real difficult to analyze what the price is going to be a year from now, 2 years from now. But I think you still have to go down this track and see if you can develop these things. And I think there's multi-element types of situations here that I think, some of it might be a little bit uneconomic, but it'll be picked up with other metals in the mix.
Yeah, absolutely. So if we've got one question here, just which is an interesting one. I can send this over to Ali. Maybe This person's just trying to build a portfolio right now, and he wonders, is this a short-term defense trade or a long-term strategic metals story plus 5 years? What do you think of that one?
Defense is certainly front of mind given the geopolitical tension that we're seeing, as well as, to echo Christopher's statements, we don't see governments sort of pulling back from ensuring that they are spending, and we're not seeing a plateau in the defense spending. But the elements that we're speaking about today are used in various capacities. So automotive and wind power, nuclear power, microchips. And when you look at the world today, you look at where the GDP is growing the fastest. Well, it's the emerging markets, and the emerging markets are getting very quickly populated as well. So their population growth is rapid. Their GDP growth is rapid. It's world beating with respect to what we have in the G7, for instance, or even the G20 at this point. So demand is going to start to come from these emerging markets and continue to support the price increment. So defense will continue to be a big buyer, but let's not forget the emerging markets accelerating as they are.
If I can just add to that as well, take tungsten. I think global tungsten demand about 10 to 15% goes into defence applications, but you start looking across all of the different manufacturing processes to manufacture materials, then you get into the fact that the dyes used for making copper wire, aluminium wire, they're all tungsten dyes. The cutting tools to make even things like the Kevlar helmets used by the military, they're all tungsten carbide cutting tools. Your construction machinery, your big raise bores to do underground tunnels, they all involve tungsten in the cutting heads, the knobs, blades, all of your machinery that's digging up the asphalt or the bitumen, they're all cutting tungsten carbide cutting blades. Women's sanitary napkins, nappies for babies, they're all using tungsten carbide cutting blades on a circular cutting machine. All your aluminium cans, it's all tungsten punching tools. All your hot rolled coils for steel, that's all tungsten carbide rolls to roll that out. So you look at the plethora of different industries that it goes into, either as a finished product or in the manufacturing of another product. And that's where tungsten's just got so many applications, to the point where it's almost price inelastic, because in a number of applications, it doesn't matter what the cost of the tungsten is, because it's not a big volume of tungsten that's consumed or utilised in the process, but the process or the product doesn't work without it. And so, people are feeling pressure because of where the prices are at the moment, but ultimately the finished cost of the product is not relevant in many applications in terms of the input cost of tungsten. But quite simply, the product, the manufacturing process doesn't work.
Yeah, that's a great point you make. This isn't just about military metals. It's got a massive range
of beyond.
And I still find this paradox quite funny that they use tungsten carbide nipples on the drill bits for RC and other type of hammer drill holes to find the tungsten. So you're cutting through tungsten to find tungsten.
To find the tungsten, niobium, the copper, iron ore, coal, all ground engaging gear. It's just utilised across so many different industries.
Yeah, absolutely. So we've spoken a lot about tungsten, and Murray, do you want to run us through a bit more where niobium fits into the market? Is that also got a lot of industrial uses separate from military?
Yeah, it sure does, John. It's used in jet engine components, rocket nozzles, and rocket engine parts. And there's more and more rockets being used in the world, of course, both for military and industrial applications. It has an ability to maintain strength at high temperatures, a lot like tungsten. It's valuable for advanced aerospace propulsion systems. It's armor and structural materials. It's used in naval vessels. Niobium increases toughness and weldability without adding any weight. It's a superconducting mineral because niobium becomes superconducting at low temperatures. Its alloys, niobium titanium and niobium tin, are used in superconducting magnets for sensors, detection systems, high-performance radar, electronic warfare devices, and particle accelerators and missile and space systems. So it's becoming more and more valuable as and absolutely necessary, as you have to, much like tungsten, absolutely necessary. There's no substitutes for these things. So that's an important thing to remember. There is no substitute for this stuff.
Your example of Niobolt was a good one, Murray, in terms of Niobolt battery. They're replacing the graphite anode with a tungsten niobium alloy. And basically, not just is it fast charging, it's also fast discharging. And so when you're looking for high performance, you're looking for high torque, the battery that they're producing will enable that use in trucking applications, train applications, big machinery applications where you need a lot of energy fast. That battery will stand up under that sort of performance. I've seen test work done on it in mines in Australia, and it works very well.
Yeah, and I think AI too is going to be a big proponent of developing new uses for this stuff. And I think that's not going to slow down anytime soon either. There'll be more and more uses developed for these materials, and I think that'll continue on as we're able to use the technologies to advance all sorts of components used in everything these days.
If we, there's another question that's come through. I actually lost it. I'm trying to find it again. But it basically was just saying, how quickly can we really bring a meaningful amount of supply, like online? Like you mentioned earlier, Craig, that it takes 15 years, kind of ballpark from discovery through to making a mine. But how quickly could we actually ramp this up based on where companies are across the globe in the development cycle? Maybe Christopher, did you want to take that one?
Really, Ali's showing, how you can, accelerate. If you've got the resource and you're dedicated to getting it out of the ground, and there's not government standing in the way, and with the tailwind that the capital markets are giving us now, look, 2 years ago, you couldn't raise money for any of these spaces because it wasn't relevant, or the amount of money that you could raise was merely the type of money that kept the lights on. Now we've got a great financial situation combined with a need, combined with a government, sort of wish list. The only thing that's standing in the way is now some of the permitting, but it's also that there's some companies out there that are just spinning the wheels, trying to ride the dragon of whatever good price situation is. And then when price is correct, they'll say, "Oh, thank goodness we didn't build the mine," and then they convert themselves into a lithium story because lithium has gone back up again, or gold, or something like that. That you have to sort really those that walk like a duck, quack like a duck, and look like a duck from those that aren't. And that is the key thing at the moment. Put your money where with real winners and those who are really committed. Those who are saying, "Oh yeah, we're going to do a 40,000 meter drill program," you think they don't want to produce. And when they call it a 40-kilometer drill program, run for the hills because they're just indulging in gargantuanism.
Yeah, absolutely. Unless it's a grade control program, you better be worried. Yeah.
Exactly.
Yeah. Well, guys, we're coming up for time pretty soon, but it's been an absolutely fantastic discussion with all of you, and I mean, I really liked your comment right at the start as well, Christopher. It kind of caught me off guard, but things like even iron ore and these other factors that you don't really think of strategic minerals, but they're just as strategic if a conflict was to actually break out. So a lot to think about, and I want to thank you all for coming on today.
Thanks, John.
Thank you.
Thank you.
Thanks, John. Appreciate it.